Good morning, everyone. Welcome to Monday. Welcome to Monday Minutes. Sanae Takaichi out of Japan, poised to become the first female prime minister of Japan, a disciple of Abenomics, perception, higher risk assets. There's a lower currency on the table here this morning. In conjunction with that, higher JGB long end yields, steeper curve flowing over to the U.S. market here. Policies more in line with higher spending and tax cuts. Makes sense what we're seeing on the long end of the curve with the U.S. market in tow. And we have local supply here as well in the U.S. market in 10 and 30 years later this week. Earnings season kicking off with some of the corporates. We have banks coming. We have Fifth Third Bank buying Comerica with the regulatory environment that continues to loosen up, more regional bank consolidation. So there's a lot going on here to start the week. And it's going to be a busy week. We have a lot of Fed speak. We have Chair Powell on Thursday. We have a lot of other Fed committee members speaking, a divided committee for the most part. We do get the FOMC minutes. We know where Fed Governor Stephen Miron stands. He did clarify that message somewhat recently in a speech, very focused on owner's equivalent rent, the overweight in CPI, which we don't know that we'll get this month, depending on how the government shutdown goes. But the reality is he did say, look, if rents do start to continue to go up, he would change his stance on the aggressive nature in terms of rate cut policy that he was looking for in 2025, which did seem somewhat unrealistic in our view. Largely priced for the Fed here. Another 25 basis points this month. We're not quite there. We're between 1.5 and 2 for the remainder of 2025, which we see as completely appropriate. Everything we know. Markets now clamoring for any clues they can get on the economic front. So the earnings season certainly here will matter. The forward guidance with that will matter as well. In terms of the economy, overall economic growth does still seem to be fairly solid. At the same time, we are seeing a transition in the job market, which we've written to clients about consistently this year, the transition between public sector job growth to private sector job growth, how that transition would take time. We're seeing it in the ADP numbers that were recently released, and how that transition, in our view, would require lower rates. That's what we're getting. We still think the Fed is going to take a methodical and slower approach here as inflation does remain above target, and that tension does exist. And that is the consistent theme that you're hearing from the committee members. That is the divide now, that tension in terms of what matters most here. In our view, short term, what will matter most is still the employment market, but we still think the approach the Fed will take moving forward here will be gradual. Nothing really on the economic front to move the needle. We'll keep an eye on the shutdown, obviously, in some of these releases. Nothing to move the needle this week. And again, the Fed speak, the highlight this week will be Chair Powell on Thursday. We'll be keeping a close eye on the Japanese market in conjunction with that, also on U.S. Treasury supply this week. Wishing everyone a great week ahead. I'm Greg Faranello, head of US Rates for AmeriVet Securities.